Hello guys, so today we are talking about the candlestick maths. The candlesticks are actually a way of form of reading a price action. So consider like in old times when this candlestick pattern wasn't invented, there was a line chart that represented the price actions like that, but it wasn't showing much of the about the opening and closing of the price. It wasn't showing much of the price action in there that has occurred. So it wasn't much clear, but there was like a Japanese guy who invented this candlestick pattern that really represented a good understanding of reading the price action. So guys, this is a bullish candle and this is a bearish candle. Bullish candle simply represents that the price has been breaking its highs and moving upwards like that. So on the other end, the bearish price action represents simply price forming higher lows and lower lows, as it was explained in my previous videos, and the price recently price going downwards. So this is the kind of the idea behind each of the candle. So in order to explain the technical aspects of the candlestick, we need to understand what actually candlesticks has been made of, like what are the components of the candlesticks, right? So guys, you need to understand if it is basically a bullish candle in which the price is going upwards. So if the price is going upwards, so let's consider that if the bullish candle is being formed, so we are expecting the price to rise like this, right? And the price later on went up there and closed around here, right? And similarly, if it's a bearish candle, so consider that the price is falling, right? So price is opening from the top up here and then price is going downwards and closing around here. So what are the components of the candlesticks? So guys, this point, it's a low. This is the lowest where the price actually came, and it is the lowest point, while this is the highest point where the price actually went up, right? Similarly, this is the lowest point and this is the highest point that the price actually went. So now it's most important thing, you need to first understand that where the price is opening from. So if it is a bullish candle, so this would be the opening price here. This is the opening price where the price has started to open, where the new hour or new day or new 4 hours is being formed. Whatever the time frame you are looking, the candlestick, which a bullish candlestick which starts, it is the opening price, right? I would be making it in a dashed line so that it could be like more understandable, right? So this is the point. Whenever you see a bullish candle, when on any time frame, the candle that has formed, it has four components in it. That is a low, that is a high, and that is an open, and that is a close, right? This is a close, this is open. I can write it for you guys. This is an open, and that is a close. And similarly, this is a low, this is a low, and this is a high point. Similarly, when we see a bearish candle, similarly, this is a low, this is the high. Now, the thing about the bearish candle is the open is right here because the price is coming down. See, the price is coming on the downside. So this is a bearish candle, and the body of the candle is closing here, and this is a close. So what is the most important thing to understand, that these are actually the wicks, like the wick of a candle, which you put on fire. It is a wick, right? This is a wick, this is a wick, and this is a wick, and this is the body of the candle, and this is the body of the candle. The most common understanding about this differentiating the bullish and bearish candle is through their color. So whenever you open a chart on the default setting, it would be more on the, if it is like the color combination of the blue and red, so the blue would be the bullish candle and the red would be the bearish candle. Similarly, there are different kind of color charting that includes like white and black. So black is mostly on the downside, a bearish candle, which actually represents the idea that there is something that is getting filled into it, right? So the white one is an empty candle that would be representing the bullish candle. So there are different kinds of color patterns that you can use. So for distinguishing right now, I'm using these simple candles, color patterns for your better understanding. So this is a bullish candle that has an open here, that has closed up there, and that is high there, and that is low there, right? So in order for your better understanding, I would be like, making it like up till here, right? This is the open, and this is, let's consider this is a close, right? So that I can just explain you well. Now let me use a line chart in order for the better understanding that how actually it formed, right? So let's consider that this is a open here, right? This is a open, this is a low, this is the high, and this is the close. So what really happened in this candle? You need to, as you just look at this candle on any time frame, you need to understand the backstory, that what really happened, that how the price action actually formed or how the price action actually moved. Because whenever you just like open up the charts, you would be looking at the candles, but you would be looking like, yeah, price went from here to here, right? That's fine. But most important thing, a trader, as a trader, you have to understand that what's the price action, and you have to train your mindset for it, right? So this is the open, right? As the price opened from here, so what ended up happening, that price directly went on the downside and formed a low, right? As price opened and formed a low, then what happened, that the price went up and price actually went to this high, and then price closed around here. So this candle is basically a representation in a line graph as this, right? Similarly, let's make it like that. Oh, sorry. Yeah, let's make it like that, and let's leave it like that. So this is the open. This is around where the price is opening, right? This is the high. This is the low, and this is the close, right? So as you can see that in the bearish candle, how the price opened around here, right? Then price formed a high. This is the opening value. Like for example, if a candle is being formed, so this is the point where the price action actually begun, right? It could be a new hourly candle, because as the 1 hour changed, like if it's like around 12 o'clock and now it's 1 o'clock, so 1 o'clock the candle would be starting from here, then candle would be, the price would be going upside and forming a high. Price couldn't hold the high, and what ended up happening, that price starts coming down, and price came to the close point, but it went lower there and price closed up here. So this is what ended up happening here in the line chart, and that would be an basic understanding that what this candle actually represents. So let's make it more complicated, in a sense that if this is the structure, right, and the open is around on the upper side, and this is close, this is low, this is high, right? So how would be the action of the what would be the price action that we can see on the line graph right now? So line chart, what would be happening, that the price opened up here, price went high, price came back down, and price actually closed around here. So this is the point where the candle closed. It could be based on any time frame, right? I'm repeating because you would be watching the candles based on the daily time frame. You would be watching the candles on like 4 hours, like on any time frame, even on 5 second time frame, and even if you go on like below than that, you would be finding a candlestick. So each candle represents a certain time frame. For example, this is a 15 minutes time frame which I am looking at right now, right? So each candle here is equivalent to the 15 minutes. So in 15 minutes, this was the opening of the price. Price opened from here, then price went to the higher point, right? As the price went to the higher point, then price came back down and formed this low, and price closed around here, right? Let's make it in a different sense so that it can be more complicated. Let's consider it like that. So what is happening here? Price opened here and price closed here. You need to always take these measures based on the body of the candle, right? So this was the opening of the price, and this is the closing of the price around here, right? So what is happening, that the price opened here, right? As the price opened here, the price went down to this low, then price went back high up there, and then price closed around there, right? And it has formed this kind of a candle, right? So this is a basics of the candle. So let's put ourselves to one more test, right? And by removing all this, wait a minute. So this is a bearish candle that is being formed here, right? And this is a bearish candle. How would you form the high and lowest point of it, right? First of all, we need to mark it. So this is the low point. This is the high point. So for the convenience, I'm going to write L, low. This is high. This is we can look at this candle because the color of the candle is what it is, the color of the candle that is red. So it could be like any color based on your own preferences. But for example, like this is more, I understand it's more of an orange type color, but let's consider this as my preference for bearish candle. So I know that the price would be going downwards, so that's why I consider it the open of the candle, right? And this is the close of the candle. Guys, always remember that the close and open and close is based on the bodies. Highs and lows are based on the wicks. So this is the close of the body. So how would the price action be forming based on a line chart? And that line chart is basically something that you have to form in your head. That line chart would help you for understanding that what actually the price action was, right? And it would give you a better sense of the price action. So this is the open. The price went higher up there because as we can see from the color, because this candle is closed now, right? So for example, this is a 1 hour candle. The price this candle formed from like 12 o'clock to 1 o'clock, and after 1 o'clock to 2 o'clock another candle would be formed based on your own time frame which you are looking at, right? So this is the open of the candle. Price went high up there, then price went back and formed this low, and then it closed around here. So this is the type of the structure that is currently being portrayed from this candle, right? So I hope, guys, this makes a good sense. So I would be I would be like telling you about different kinds of combinations of the candles that would help you to calculate that what actually that candles mean. Like for example, I would be forming two candles of 15 minutes time frame, and then you would be realizing that how a candlestick is formed in 30 minutes time frame. So I hope uh, what I'm trying to say is making sense, right? So for example, this is our candle, right? This is our, by the color we can see this is our bearish candle, right? And let's mark some lines. Guys, you don't need to mark lines every time, but right now for the explanation I am doing it for you so that you guys can understand well, right? So this is the high, right? As we know that this is a bearish candle, so we would be understanding that the price is opening around here, right? Price is opening from the top, right? Open, and this is the close, right? So now this is our bearish candle, right? And let's consider that this is our bullish candle, right? And this is the wick. This is actually the wick inside it, right? So we could have like put this wick for your better understanding, because I hope there would be some people that were thinking why I've made like that. So anyway, now let's consider that this is the high, this is the low, right? As we know that it is a bullish candle, so this would be the open of the price, right? And this would be the sorry, this would be the close of the price, right? So now the question arises that this is a 15-minute time frame candle, and this is the 15 minutes time frame candle, right? So let me so what would be the candle that has developed based on a 30-minute time frame, right? So this is a 15 minutes plus 15 minutes is equal to 30 minutes, right? Do you guys understand that? This is a 15 minutes candle, this is a 15 minutes candle, how it would be forming based on a 30-minute time frame, right? So this idea should be incorporated in your head when you are trading, because if, for example, if you're looking at a 15 minutes charts, right? So you see, like, for example, four 15 minutes candle, you should always understand that how the candles are being formed currently on 1 hour time frame. So not putting you to the much hustle, I want like to show you that how you can calculate that based on like two candles, right? And if you just master these two candles, you can understand that. So this was our open at the point, right? Let's look at this one. Okay, guys, keep your eyes on this one. The price went down, right? Let's make it more realistic in a beer sense, right? The price opened around here, right? Then price went down and closed up here. Okay, and price formed this low and price closed around here, right? This was the opening point, as the same as the candle was developed, but right now we would be making it based on like 30 minutes time frame, that how these two 15 minutes candles could be added up and form a 30 minutes candle. So it's the same candle that was here, right? Because 15 minutes 30 minutes, what it starts with, what, like 15 plus 15. So we would be putting this 15 here, right here. It has the open here as usual, right? And it has the close right here, right? So the price, what ended up happening, that the price went down there, right? So so it is the same 15 minutes that you're looking here, but the situation starts when this candle actually forms. Like, this was the already candle out there, but now this candle's actually formed. So what ended up happening, guys, that the price, when it came back to this low, price opened around here. So for the better understanding, let's consider that this is the closing price and now this is the opening price. Keep it like, we would be keeping it same, but there could be like different kinds of scenarios out there that is a gap concept, which I'm not going into it right now. So this is the close of the price. Now the next 15 minutes candle starts exactly from this point, right? So this is the opening, this was the closing of last 15 minutes, and the next 15 minutes opening is right here. So now the idea is that we need to form that how the candle is being formed in a 30 minutes, right? So this is the opening of the 30 minutes, but you consider that the price went up till this low, right? So the price opened around here, right? This was the close, this is the open, price opened around here, then the price went down and forming this low. So this was the candle, right? This was the candle that now we are combining these candles, right? This candle has formed the low here, right? And this further this price starts going up, right? It opened around here, price went down, and then price again start going and forming the upper candle right this, and price open has shifted. The price open was around here first, right? But because of this body, when this body is placed inside this, right? This buyers and these sellers, they are portrayed as a wick in here, right? So this open is now pushing the price upwards and forming it as a bullish candle, right? So the price high goes high up till there, right? So price goes up till there, and now price closes around here. Guys, I hope I made sense out of it, but let's do it again so that you guys can understand again, because I know it's a bit complicated. Okay, let's see. So this is the candle of the 15 minutes, and this is another candle of the 15 minutes. Now we have to combine these candles and form a 30-minute time frame candle, right? So how a 30-minute time frame candle would be formed? Now we know that the lowest point the price has touched is this point, right? Combining by these two. This is the lowest point which its price has touched. And we know that the highest price which price has touched is here, right? This is the highest price which price has touched. So this price is opening from here, but this is a bearish candle. As let's put this bearish candle in this bullish candle, right? So whatever space it has taken here in this bullish candle would be considered as a wick. So this would be considered as a wick up till this point, right? So let's make this is the lowest this is the lowest point which price has touched. This is the highest point which price has touched. So we have made our wick, right? We have made our wick here. Now let's work on the body, that how the body is formed. So what I'm trying to tell you is as this bearish candle, when this bearish candle is merged into this bullish candle, so these bears, this selling candle actually cancels the effect of the bulls around up till this point where it has formed. So the new candle that would be formed would be opening from here and going up till there, till that close, right? Because this is the point where there weren't any sellers present. So this would be forming an open of the candle, and this would be forming a close of the candle. But guys, you see that how this bearish candle here changed its color to the bullish candle just because it wasn't covering up this point. So guys, what I mean to say is that this is the point. This light box actually shows that this is the area that wasn't touched by the sellers, right? If this candle would have gone up till there, so what is the area that would have been left is around this much area, right? So what would be the candle look like? Candle would be looking like this, because this is the point till the sellers were present, and it would be forming this around this type of candle, right? So let me give you another example. So I hope this basic first example made some of the sense, right? So let's go and look into the different type of candle. Let's consider this as a bullish candle, right? It has a wick here, and this is a wick. Similarly, now let's consider this as a bearish candle. So this is a bearish candle, and this is a bullish candle. So this is what? This is the opening price, right? This is the open. Let me write it for you guys so that you guys can remember. This is the open. Similarly, this is the open. This is the open here, and this would be the close here. And similarly, this would be the close here, right? And this would be the low point. This is the low point, and this is the high point, high level. Because this is the open, because this is a bullish candle, this is a bearish candle, so that's why it has opened up there, because the price is being pushed down. So this was the high, and this was the low. Now, what would be forming? This is a 15 minutes time frame candle. This is a 15 minutes time frame candle, right? So you see, the most important thing is that as this price open here, price close up there, right? So the next candle would be starting around here, because this is a close and this is the open. So next candle would be starting opening around here. Let's see that how it is actually formed on the 30-minute time frame, right? So what you need to do, guys, is first of all mark the highs and lows, right? Now we are adding this up. This was the high. We need to combine both of these, right? This was the high. This was the low, right? Let's consider, for a better example, for an easy example, it is just like this, right? So this is the high, this is the low. Now we understand that this is the total amount of movement that a price has done, right? Because we are combining both of these twos. And now as we understand that this is the total amount of movement the price has done, so now now just try to analyze it mostly in your brain, that this is the bullish candle and it has a bigger body. This is a bearish candle, it has a small body, right? So let's pick the smaller body candle. Let's pick the smaller body candle and put it here, right? Now consider that this is the only portion that is left, right? If this is only the portion that is left, so what it actually means, it means that this was the open for a bullish candle. So this is the type of the candle that is actually being formed here, because this is the open exactly at that, and this all candle actually, when it is merged with the bullish candle, it is all getting nullified based on the presence of the buyers and sellers, which is shown just as a wick. So this was the open and this would be the close then. And this is the type of the candle that would be forming, and this is known as a hammer candle. That name isn't important, but the most important thing is that what is the concept. So now let's consider a line graph for it. This was the open, this was the price that went low. Then what ended up happening, just watch this thing too as well, right? So what ended up happening, that price went all the way back up high there, right? I mean to say price came all around here, then price reversed back till this point, right? Then price reversed back and closed around here. So this is the type of the price action that occurred in order to for formation of this all candles, right? So I hope it makes a better sense. And further moving towards like more different examples, it would give you like a better understanding about the concepts. So let me remove all this. I need to clear up the chart so that I can give you some better examples. Now let us consider that this is a bullish candle, right? The opening of the bullish candle is around here. This is the open. This is the close, right? This is the low. And this is the high. So this makes sense, right? Now, this is the point where the price is closing, right? So what we expect? We expect a next price to be opened from where? When there would be a closing, then there would be an opening on the other side, right? This is a close, right, guys? This is a close of the last 15 minutes candle. So the next candle that would be developing, it would be opening from the close of the last candle, right? It makes sense. So now this is the open for the bearish candle, right? Let's suppose that the bearish candle actually was more volatile and it formed some structure like this, right? So as the price opened, the price may be going upside, right? But there would be some kind of rejection or some kind of macroeconomic event or any unforeseeable event that has pushed the price around this point like that. So now the price has closed. This is the close, right? This is the low that has been formed, and that's the high that has been formed. Make sense, right? Let's make a line graph for it for your better understanding, that this is the opening, this is the high, this is the low point, and this is the close. This is the kind of a price action that has formed, that this is the open, this is the high, this is the low, and this was the low that we're touching. This is the close of the price. Close of the price is something which shows the closing of which shows that this was the last price. Like whenever you are looking at the historic charts of the data that comes after the closing of the markets, it shows the closing prices, right? I will show you in the charts as well. But now further moving, how it would be shown in the 30 minutes time frame. What we are doing, we are first of all we are marking our highs and lows, right? Because highs and lows are something that is definite. So this is the high, this is the low. Make sense, right? Let's put a wick in between those highs and lows. So this was the high point, this was the low point, and this is the wick, right? Now carry this bullish candle, right? It has opening from here and it went up till there, and just drag it here and keep it here, right? Why here? Because this was the opening price, this was the closing price, and this was the opening price of the new candle, right? So this is the structure that is not being cancelled out, right? This is the place where the buyers were pushing the price upside, but sellers actually pushed it downwards, right? Consider it like that, that the price went upside, full up, and then sellers dragged the price down, and forming this kind of, if we combine this, so this is the kind of a price action that price action line chart forms like that. So now this is the point which was not being touched by the buyers, so that's there were only like sellers around this point, right? So the candlestick that would be formed based on that would be like that, right? This is the type of a candle that would be formed, right? Because the opening then would come around here. Why the opening is coming around there? It would be based on the color of the candle, right? If we know that this is the red candle or this is the orange candle that represents my bearish candle is being formed, so we would automatically guesstimate that, and we would automatically visually see that this is the opening and this is then the closing of the price. So this is the kind of the candle that would be forming based on this idea, right? So this was actually the idea here, and now on these 15 minutes candle and this 15-minute candle, after the combination of these two candles, this is the type of the structure that would be formed. So in the previous example, this was a bullish candle, but now this is a bearish candle because it has opening right here. So let's consider it in a simple way, right? Now consider it like this, right? Let's make this low as much this much, right? And let's bring the opening around here. You can alter any kind of example, and all these examples are for your understanding, right? This is open, this is close around here, because I'm putting the close around here because this is the opening, right? And this is the opening of the next candle. Now this is the scenario. What would be the difference, guys? The difference would be that picking up this bearish candle and dragging up here, because this is the open, we would be using the smaller candle for understanding that which part would be cancelled out. So this is the point that is actually left, right? And that represents the buyers, because this is a bullish candle that is extended because the selling candle couldn't even cover that point, right? So this would automatically would be turned into like green, right? And as it would be turned into green, because this is the green part that is left, so this automatically the open would come here and close would come there, and that would represent a bullish hammer rather than that bearish hammer, right? So guys, I hope this analogy made sense. So let's go to some other example. So rather than like removing everything, I can keep all these because it would save some time, right? So now let's consider, for example, that now you have this candle, now you have this candle, now you have this candle, right? And the most important thing is now that each candle is a 5-minute time frame, right? Now this equivalent to 15 minutes time frame, right? So these 5 candles actually form what? These actually 5 minutes 3 candle form what? 15 minutes time frame, right? So how would be the candle based on these 5 minutes time frame and 15 minutes time frame? Can you guys guess? So let's form our low. So this is the lowest point and this is the highest point here, right? This is the low point, this is the high point. Now the open is from where? This is the open and this is the point where the candle is closing. Guys, I am showing you in a combined form right now, considering all these candles as a one candle, right? Each candle has its own open and each candle has its own close. But right now we are thinking that how like the 5 minutes 5 minutes candle combine together to form another candle, right? In a higher time frame, for example, in 15 minutes time frame, because this is 5 minutes, this is 5 minutes, this is 5 minutes. So let's mark our low. This is the low. This is the low here. And let's mark our high. And this is the higher, right? Now we understood and we have marked our lows and highs. Let's make a wick representing our highs and lows of the candle, right? Now we understand that this is the candle that is bullish because based on its color. Now we understand that this is a bullish candle based on its color, and similarly goes with that. So we see that the price is opening around here, right? At this point, this is the opening of the price. And as we know that the opening of the price, so the price actually closing where? Price is closing around here, right? Obviously, it should go more higher up, like around here. So where the price is closing around here. This is the type of a structure that you would be looking in the bullish scenario, right? Similarly, the opposite of it would goes with the bearish. I would be quickly forming that just because for your understanding. So this is the low, this is the high, right? This is the high, and we have this candle. It's right above here. Now this is the candle, guys, that is being formed, and this is the candle that is being formed, and this is the candle that is being formed. And similarly, we have wicks of these candles forming their highs and lows, right? And this is the type of the structure you can see. Because the price is going upside, right? So this is the opening price, this is the closing price. This is the opening price, this is the closing price. Guys, you need to understand that the charts move from left to right, right? Because the time, here we have the time, on the x-axis we have the time, and on the y-axis we have the price. So there there could be a question that why you haven't formed like candles like that, right? So because because the chart is moving from left to right, so that's why I made it like that. This is the, what is the opening price? The price is opening around here, and price is closing. What is the closing price? Price is closed around here, right? And this is the low of the candle that was formed, right? So how we can expect the movement of the price? This was the open, and let's put a wick in between so that we can put the highs and lows. So this is the high, and this is the low, right? And we are actually combining these two. So put it here so that new viewers doesn't mix up with that. This is the open of the price. This is the close of the price, right? And this is the low of the price, and this is the high of the price. It is how these structures are being formed. So I hope it makes sense here, right? That how we can combine these two candles. And this is like a 5 minute shot. So let's make and go and study different examples. Now I have told you about like the hammers, that how they are formed. And for example, now this is a bearish candle, right? This is high and low. Similarly, this is, now you guys know that this is open, this is closed, this is low, and this is high, right? I'm not using that so that you guys can understand. Now let's imagine that this is any time frame, any time frame. It isn't any like a specific time frame. And now we have, for example, the bullish candle. So it closes. This is our green bulls candle, right? And it has formed something like that because this is the open price, this is the close price, right? So the next candle that would be the opening price for the bullish would be where? Here, right? So guys, I believe that I need to make this because I believe that much people won't be able to understand. So let's consider, I would be like using a shortcut so that that makes sense to you guys. This is a close. So this would be the open of the bullish candle, right? Next candle would be starting from where, guys? When there would be a closing price, then the next candle would be opening around here. Now we combine these two, right? What is the portion that is left? This is the portion that is left. This is actually the point where the sellers and buyers actually reacted, and it is formed and portrayed in a form of a wick, right? So this is the type of the candle that is being formed right now in here. What is, now let's consider that the candle only goes up till there, the bullish candle goes up till there. So what would be happening and closes around here? So the structure that would be forming would be a bearish candle like that. This would be the structure that would be forming here, right? So as we know that this is a bearish candle, that portion that was left because buyers couldn't push the price up till that portion. So this would be the candle on the next time frame. So for example, guys, this is 1 month time frame, and let's consider it like that. This is the closing, and this is the open, right? It can't be like that, so let's make it like that. Now consider this, that this is for example like 4-hour time frame, and this is 4-hour time frame. So what would be happening in 8-hour time frame? Because we can make any time frame in our head based on in the trading, right? And even we can just customize it from here too. So what would be happening here, right? This, we can make our low, we can make our high, right? Now we understand that because the price opened around here, closed around here, so the closing price, the previous candle's close price is the opening price for the next candle, right? This makes sense. Now we know that this is the bearish candle. So we take the smaller candle, we put it here, right? And we just see that this is only the point that was not, the sellers couldn't take that point after that. So we just bring it up here, right? So this is the type of the candle that would be forming around here, right? So it makes sense, guys. So candlestick patterns are like different types of patterns that can be used, and using this candlestick maths, we can equally understand the importance of these patterns. Like it really helps, right? So let me show you like show you guys that how we can, how important is that and how we study that, right? So guys, we would be focusing on these two candles, right? We would be focusing on only these two candles, this candle and this candle, right? Now you see, like, this is a bullish candle, right? It has a low point here and it has a high, but the high and the closing price is around the same, right? How I want you to understand that, you guys need to see here, right? This is the open price, this is the high price, this is the low price, and this is the close price, right? The close price, what is the close price? Close price is 1.30750, right? And the high price is, what is the high price? High price is the same as the close price, right? So what it actually means that the price actually came back down towards forming a low, and then price pushed the high, but the body also went with that, with that with that wick equivalent to that body. So then what really happened, that the price opened from here and then price went down and formed that low. So how we can read the price? The price opened here, right? Now O is for open, so read 1.30749, and if you just see here, there is, the price is around here, right? So this is basically the open of the candle. Now this is the close of the candle. We can see from that is 1.30062, 1.30062. It's the same, right? So we don't even need to, we can just put our cursor on it and it will be going to show our candle, right? So this is basically the idea, right? So you can use like different types of combinations here, right? Let's combine these two candles here, right? So what would be the idea, that how the candle would be forming? This is a bearish candle, right? The open is here, the close is here, the low is here, the high is there, right? This is the open, this is the close. But as you just zoom in and look at this candle, the wick is like really small. But as we combine them, right, now let's combine them, and for the better clue, like, this is the this is the low, and up till this point, this is the high, right? Let's make it here for the visibility reason, right? We would be forming it in a way that it is totally equal, right? This is the low and now this is the high. It's equal, approximately equal, right? So guys, this is the open and this is the close, and price started forming around here, right? Price started forming around here, but this is the point, guys. This is the point, and up till this point the price was bulls had taken over and closed around here. Bulls went up there but came back down there. So in that case, this is the type of a candle, that is, these two, the combination of these two candles is like that. And even further combining with that, it would be further pushed, the wick would be pushed up there, right? And the opening, and this was the closing, so this is the opening, and the price would be pushed up till that body, right? And again, like, there could be like different combinations. So this is actually, guys, the candlestick math, and I hope, guys, it was like a worthy for your time and you understood all that stuff. So best wishes, take care, bye.